Well, the grain market is headed higher today, and in fact, the cattle market that started out sharply lower, it is also somewhat turned around. Welcome to the Market Day Report. Let's find out what's going on with these numbers here, and then we'll get analysis with Jim McCormick at Allendale Incorporated. First, let's look at the corn market here at the partway through this trade session here today. And the corn market headed just a little bit higher. Jim McCormick here with us. And Jim, first of all, we're kind of breaking out of a little bit of a range we were stuck in.
Yeah, we are finally. I mean, we went down there this morning early in the day, tested the 343 level, went right down to the contract lows. When they could not take it out, we saw a nice flip in buying, and here we are. We're trading a 7-cent range and right up on the highs of the day at 350. I think a lot of this has to do, John, with the fact of the funds. They're short about 170,000 contracts of corn is the estimate. That's within 50,000 of their max position they've ever carried. Going into the fall low, a lot of guys are thinking, hey, I don't really want to be caught short if these funds ever come up with a good reason to reverse that position, and I think that's probably today's momentum.
Right now, December corn at 5 3/4 at 350 1/4, just like Jim mentioned, and that is on the high of the day right there. July at 5 1/4 at 380. While we're still here on this corn market, Jim, I want to ask you about that low there at 343 that was set earlier. That is real close to some of the support. We had support at that 342 to 344 area. And as you pointed out, go down, we test that, we come off of that. Is that pretty significant?
I think it is definitely significant if we can manage to close higher today. The key number the traders I think are going to look at is Friday's highs. On Friday, we had a high of 50. We're right there at it. If we can close above 50, it's a nice key reversal. You took out the previous day's lows and closed above the previous day's highs, and rejecting those contract lows. That would argue maybe we're going to get a decent bounce, at least back up toward the 50-day moving average, which is around 354, which happens to be the near-term downtrend line. If we can get through that, you could get as high as 362.
Okay. November soybeans now up 2 at 980 3/4. January soybeans up 2, 991 1/4. Not as many fireworks over here, Jim. Is this harvest pressure maybe?
I think it's a little bit of harvest pressure. I think also what's going on, John, is that's also a little bit of fun play. If you look at the CFTC report, the funds are short wheat, they're short corn, they're long beans. And I think probably what you're seeing, the limiting factor in the bean rally today is they're essentially unwinding them spreads. So they're buying the corn, buying the wheat, and the beans is kind of the weak leg, and they're selling it, and that's capping it. Now, technically, beans went right down to their 200-day moving average, which is 975. You might recall back in September and early part of October, that was major resistance. We held it and bounced off of it, and that might make us a move back up to test maybe back up toward the 987 to be the little resistance level we're looking for now that we held support. Sure.
You mentioned the buyers coming back to this wheat market, and that's really showing up. Chicago wheat right now on the nearby up 9, 435. July wheat up 6 3/4, 479 1/4. You go to Kansas City, we're gaining here also. December up 9, 431 3/4. July up 8 at 480 3/4. And over to the Minneapolis wheat for December contract, we're up 4 at 615 1/4. July wheat up 1.5 at 635 1/2. But Jim, that Kansas City that Kansas City market and the Chicago market almost walking in lockstep with each other now.
Yes, they are. They're pretty much moving hand in hand, both moving up. Technically, it's kind of like the corn. They went right down to support. They found they ran out of sellers at that low levels. The funds already shorted, and same thing, a little bit of short covering today, which is also nice to see.
All right, Jim McCormick here with us with Allendale Incorporated, but be sure and stick around and stay tuned because when we come back, we'll get to all of the livestock trade numbers. That's straight ahead here on the Market Day Report. Jim McCormick with Allendale is here on the line with us. And Jim, we had that cattle on feed report out, and early morning hours really found that cattle market taking it on the chin there just a little bit with lower prices. But then a little bit of optimism has come back to this market, and now we're trying to trade higher. Let's look at that live cattle number, get everybody up to date on what the latest is. And as we look here, it's the October live cattle now up 4 at 111.72. December live cattle up 28 at 116.88. Then February up 4 at 121.32. So resilient market.
It's definitely resilient. I mean, I think you could call this cattle market kind of a classic reaction to these cattle reports. It seems like whenever the trade expects it to be bearish, they build it in. We got the bearish report. They traded it for about 30 minutes, and the buyers came right back in. As you said, we've had a really nice reversal. We've had about a $2.37 reversal on the Dees cattle, about a $1.57 reversal on the October cattle, and shows you maybe this is priced in. It was definitely a bearish report, though. That placement number, guessing, was around 108, coming in at 113.5. It shows us we got plenty of cattle coming at us, but that's not going to show up till the latter part of the second quarter. So, that's why they're discounted it pretty quick and trading a little bit more near term. We're hearing offers in the cattle right now at 113, 114. That'd be a couple dollars higher than we traded last week, and maybe that's giving us a little bit of support and optimism. Maybe they'll get that higher price this week. Well,
and it also speaks to demand, according to some in the trade. In fact, here at midday, the box beef trade, or the cutouts, the choice, down 54 cents at 199.32. Just took a real good run at that 200 mark, but didn't quite make it. The selects up 71 at 191.85. So that speaks to demand a little bit.
Well, I think it speaks to demand. Definitely, we're thinking maybe it'll kind of, that box beef will maybe kind of struggle a little bit this week, but as we flip the calendar going into November, you should start seeing some of that holiday procurement show up, and hopefully that'll push that box beef through that $200 level and keep the cattle market exciting.
Okay, let's check the cutouts here for the pork at mid-session. It was mostly lower most of the way across the board. In fact, carcasses down 19 cents, loins down 25, hams down 3, but the belly market up 39. What's this market trying to tell us here in the hogs?
Well, right now, I think it's trying to follow the cattle market. I mean, it's interesting on the hogs, the grain market. Corn and wheat went right to support and held. Now, if you look at the cattle, looking at like your the hogs, the December hogs, they got right up there to about the 65.32 level, which just kind of matches those highs made back in August, which were at 65.35, and the high made back in July at the same price level. So technically, they failed at resistance, and that's why we're seeing a little bit of pressure on the hogs today, I believe, is technical failure so far.
Sure. Right now, December hogs down 75, 64.10. February down 20 at 68.90. April hogs down 2 at 72.88. Let's look at the feeder cattle market because we haven't gone there just yet. It's October down 27, 153.35. November feeder cattle down 65 at 152.43. January feeders down 57 at 150.75. It is interesting that there is more optimism again this week in this cash cattle trade. But I know that about every quarter or so we come out with some heifer numbers in that cattle on feed report, and somebody pointed out to me earlier that heifers been holding back for feed are on the rise.
Yeah, like I said, I think overall the market is, I think you look at the curve, plain and simple. They're giving 111 and 111.70 for October cattle. You got these April cattle at 121.40. I think the cattle market's optimism in the long run, the demand's going to be there, and you got a lot of cheap grain to feed out as well. So that tends to drive people to the feeding market.
Good point. Jim McCormick, Allendale Incorporated. Jim, thank you very much. And let's look at the dollar here. Just get an update on this dollar. We've been following this pretty closely today. Earlier, it was still a little bit higher, and right now we're up 110 at 93.690 for the